Hi guys, welcome back to another important video. Like the last video where we discussed the operator signal, this video also is going to be something like that, and it is the continuation of the last video. If you have not watched the first part of this, you have to watch it, only then you'll understand the basics. On the previous two videos, the first one I released a GAN astro concept video, in that I told you one important thing: keep an open mind, right? Second video which I released was the operator signal. In that also I told you to keep an open mind when you're learning that new concept. So in this video also I'm going to ask you the same thing. Listen to this video like it's a story. Why I'm smiling right now is because when I record this video is because at the end of the video I know what are the doubts is going to come, what are the questions people are going to ask me. So have some patience, we'll get to the end part. End part is going to be something very interesting. Right now, what did we discuss the last previous part? We discussed that how we can adjust the FRVP. Now the FRVP tool is critical nature, how it helps us to understand the story between the candlesticks, right? We discussed that. And then we had some discussion about the area of operator activity, the right side chart. Again, if you don't know what this chart is, I highly request you go back to the previous part, watch that video and come back again. It is the exact continuation of that video. Okay. So we discussed operator activity, how a range of price, how a series of delta candles were different. Now you can see the delta candles have changed here, right? This is a flaw in the let's say trading view. These delta candles were red when I recorded the video. I showed that to you. Now it's all green, right? Here you see these red color candles is now it's green color delta, right? So all that is the issue of trading view. That is on when I teach you the volume course, only then I will explain how you can make sure these kind of issues don't happen to you. All right. So basically in that video, what did I tell you? That area of price here was an operator movement. And then why I made the video in the live market was simple, because this fall happened on Friday. So Friday midday, I recorded this first part of this video, and I told you we had a fast move which broke down the market structure here, and it was going and touching towards this FRVP zone. How did we get this FRVP zone? All that I've discussed in the first part. And the main reason I told you I'm making that video is because to tell you that this entire move, it did come fast, but it's again a fake move. No matter what happens, I told you this high has to be retested. Does not matter if it happens in 1 week, does not matter happens if it happens in 1 day or 1 month, it does not matter, but this high has to be retested, right? So it came back again this week, and this week we tested this high again. I just wanted you to have an open mind towards how candlestick patterns work. So the main point I wanted to explain it to you is that a red color candle does not necessarily mean selling pressure. Green color candle does not necessarily mean buying pressure. There's a difference between that. The story behind the candlesticks are different. Now, in this part, in the second part of the operator signal, what we're going to learn is that an anchor point theory. Now, anchor point theory is what I call it. I'll explain it to you. It's actually very basic, it's very simple. Here, what we require, the first point we required was, in the previous part you saw that this part of price, there was an activity called the operator activity, and then in the same area of price there was another operator activity. So what is the reason for this? I told you, either they are using this zone for buying. Why can't it be one single candle? Why can't it be one single candle? Let me just show it to you here, and I will mark these two ranges first. Let's say this is the one blue color range and this is red. Change the color of the box, it'll be easy. Now the same thing we will apply it over here in the second chart, right? So this is where on the right side of the chart you see, right? So this is the volume chart. Here you see, what did I mark? I just marked the range of these candles. Now again, let me tell you, if you don't understand these candles, I highly suggest you go back to the previous part, watch it again and come back. You'll understand this. Here, what did I want to tell you is that anchor point. Now, what is an anchor? I think everyone knows what an anchor is. It's a basic English term. Anchor is nothing but is explained using a diagram. You'll understand better. Everyone knows a ship, the Navy ships, the anchors they use. We'll take an example of a pendulum. This is a point here. Imagine this is the starting point of a pendulum. Everyone knows what a pendulum is again. You leave this ball or a pendulum, it'll swing like this, right? And then what happens is it changes its direction and comes back here. So in this entire movement, what is the anchor point? It is moving with respect to this point. It is tied to one specific area, one point it's tied, and from that point, it is moving towards left, right, left, right. Okay. So it is held on, it is stuck to one important point here. This is the anchor. Same thing when you see Navy ships, your big Navy ships, they carry a lot of cargo, right? And what they do is they have, this is the water, let's say, they have a small hole here. And if they want to stop the ship from floating, right? If they don't want the tides, the ocean, the sea to take away the ship, what they do is they drop an anchor. Usually the anchor, it looks like, I think you've seen a lot of this in the cartoons. It looks something like this, right? They drop this anchor into the sea, right? This stops the ship from moving from left to right. Or if the ship also moves, basically it is in a stationary area of price. Before anything happens, it stays. Before it starts moving anywhere, you have to remove the anchor, correct? You have to remove the anchor, only then the ship can sail. If it wants to stay in one place, if it does not want to float away, they use the anchor as a weight, a heavy part, heavy weight. Now, the same thing, if I translate it to your markets, if you find an area of price, if this is an area of price and this is the anchor, right? So what does this do? Like the pendulum, it can, price can swing above it, price can swing below it, right? From here, it can swing up, it can swing down. But this is where the real activity has happened. All right. This is the basic understanding of it. What is this anchor and how do we find it? Now, here, very simple. I have marked these two zones. The reason why I have done it is very simple. There was a series of candle. Now, here it shows green, but when I recorded the video, this is an issue with TradingView. It was red, right? It was red. So when I recorded the first part of the video, it was looking something like this, a green color candle with a red delta, something like that. The reason why we use this as an operator zone, where the operator, or you can call it as the algos, or you can call it hedge funds, or whatever you want to call them, they were active here. These are not retailers, because they use this area of price to short the market. They use this area of price, and there was series of red mismatch delta, and this is called an imbalance. There was a mismatch and imbalance candles. There was series. So same thing happened in this red color part, right? This is the reason why I told you, as per my studies and all my research, that price usually retests this entire move. So if there's a move which started from here, you can see there's a green color delta here. And what is this delta and what are these candles? Again, go refer to the first part of this video. This red color candle, there was a series of candles and there was imbalances there in the candles. Understood? Done. Now, this is the two zones we marked. When there is an overlapping, you understood this? When there is an overlapping of two operator activity zones, two or more, right? So you understood what I'm trying to tell you here. There is this zone, first one, there is this zone. They are overlapping in some area of price. Okay, understood that? Good. This is what I call the anchor point. All right. When do they form? I'll tell you that. But before that, let me just show you what has happened in price right now. If you look at the price right now, there was a rally in the market. From this low, we can see the price candles have rallied. In this rally also, you can see there's a green color candle with red delta. There was series of two candles which happened like this. This is not all. These two candles also were the same. These two candles also were the same. So is there real buying happening in these candles? No. You can say that, sir, the previous, let's say, shorts which came in the market, they are now covering the price. They're short covering. That's why the market is rising. That does not explain red delta. So now you can tell me, sir, it's not because of the short covering. It's because the usual retailers are trying to short the market, but the market price is going up. Okay, I'm not telling your story is wrong, but towards the end of the video, like I told you, I'll tell you a different picture. I'll show you that there's a way to tell exactly how this thing is, how you can interpret this. Okay, I'll tell you the story behind it. So right now, we know that this is also an imbalance candle, right? This is also an imbalance candle. This is not one single candle. They are together. This is not a single candle. This is just one difference between them. These three again are imbalanced in a series, right? So what did I tell you? There is operator activity, or you can say the algo activity, whatever you want to call them, who controls price. Or those who have the capacity to move price. This is their activity zone. This is overlapping with this again, right? This is overlapping with this again. So there are more than one. There are three here actually. This rally also. So I'll mark this also here. So all the way to this point again, there is an overlapping, right? I'll change the color, right? So there are multiple zones of activity. Now, first you must understand, you understood what are operator activity zones, the series of candles. Now you are seeing there are overlapping in one area of price. This entire area of price, they are overlapping. So this is what I call the anchor point. Now, what did I find when I was studying the volume research, when I was doing it? What did I find was these anchor points. Now I'll convert this into price action. Now, because I've told this before also, volume analysis does not tell us where to buy and sell, and it does not tell us how do we take trades. That is why 90% of your retailers, they ignore this. If I connect this with your Elliott wave theory, this is your anchor point. Before any turn in the market. Understood? Before any turn in the market, there is an anchor point. There creates an anchor point before every turn in the market. So if I look at this rally from here, everyone knows this is a wave 3. Before a wave 3 ends, there will be a wave 3.4. You understood? There will be a wave 3.4 here. There will be an anchor point which is created here. Understood? So those who are fanatics of catching reversals in the market, those who love catching reversals, those who thrive on I caught a reversal, those people, you must learn this anchor point theory, because this will tell you in advance, okay, yes, there is going to be a turn in the future. I must prepare for that. Not only that, even those who are investors, anyone who's in the markets, when you know there's an anchor point being created, regardless of the next movement in price, it is going to come back here. Why is it going to go up first? Because again, wave structure, the price action. What did I tell you before? Volume alone is of no use. You have to connect it with price and time. So why do we connect it with time? This will tell us trap. Time tells us trap. Why do you connect it with price? It tells us the structure of the market. So right now, let's say this structure is bullish. If there is an anchor point being created in this zone, now you can say, sir, this zone is very big. It's 400 points. But if I zoom out, if I just zoom out, this anchor point is actually for this entire rally. It's for this entire move, right? We have just zoomed in. We're studying this zone of price. I'll show you another small zone, but right now, first focus on what I'm trying to tell you here. You understood what an anchor point is right now. Before every turn in the market, like a major wave gets completed, there is an anchor point which gets created. Many of you have studied, some of you especially have studied SMCs, right? The smart money concepts. all sorts of break of character, break of structure, mean thresholds, all that. I'm not saying it's wrong. I'm not saying yeah, something's wrong. Someone's different concept. They might have renamed it, whatever. I'm talking about the story inside the candlesticks. So this is what is the pattern you're looking for, right? A turtle soup pattern or whatever you want to call it. Here you're looking for an fair value gap. This is your anchor point area. If you get a fair value gap here, right? If you find an FVG here, or you find an OTE pattern, right? A retest of that, your breaker block, your mitigation block, mean threshold of the breaker block, everything is the same. It is just the anchor point where the operators, the algos have triggered an activity, and then there's a fake rally. In SMC, they say it's to cut the shorts or whatever. I'm not debating what SMC is right or wrong. I myself have researched deeply into SMC. I have my own theories, and I will definitely share it in a course in the future. Right now, first thing you must understand is that this method, it does not tell you whether the market is going to reverse big or the next move is which is going to come is a small correction. That is why you need price action. That is why you need wave theory. So here, if this is, let's say, a third wave and a fourth wave, and there is an anchor point at this point, right? There's an anchor point formed here. I know no matter what this final wave of 3, that is your 3.5 wave, no matter how far it goes, it is going to come back here, right? Now it does not tell me how far this fourth wave will go. This is, we have to study that separately, right? If I just zoom out, what did I tell you? Before any final move in the market, there is going to be an anchor point. So this fourth wave, this entire move itself is an anchor point. This pivot here, this turn here, this one, this entire move now is an anchor point, right? Multiple time framed anchor point, multiple wave structure anchor point. Now that is something which is deeper. This again, let me tell you, all this what I'm telling you, you will not be able to understand if you don't study wave analysis. This is the foundation where you have to work on. I have provided enough resources for this. You have to study via YouTube if you want to study for free. If you want to go for a higher, deeper understanding, then you go for the advanced concepts, right? So always remember, start from the YouTube free, intermediate, basics and intermediate, then move on to the higher concepts if you find it comfortable, right? So if you want to study time, if you want to study volume, if you want to study price, all that is very important. Now, what did I tell you? This is a higher range of anchor points. So going forward, I'll just tell you that this price, no matter what happens here now, no matter what happens at this part, if this is a simple movement, if it goes higher from here, we know price will come back and fall, right, towards this zone again, because it's an anchor point. If market is deciding to do a sideways correction here, then obviously it is going to go higher next, and then we are going to fall down towards this point again. So basically, what do I mean by this is that this zone will act as an anchor for it to go up and then come back down, just like the pendulum which I showed you. It starts from one direction, goes to the other direction, comes back here, right? So yes, this is what is going to happen in the market in the upcoming sessions. This is what something we understood. Now, the same thing, I'm going to show you an example on a smaller time frame. Exact same thing, anchor point. Let me take out the FRVP zone here. From this low, we had a swing low here, right? This also is an FRVP swing low. What I'm going to do is, just like the last video, I'm going to mark this zone from this swing to this swing high. Okay, we see the POC level here, this orange POC level. Again, I've made detailed videos on FRVP. Both of them are linked in the description. You have to watch that. I have one made on traps, one on how to find critical levels. There's another one which is going to come now. I've taken this high and previous high, I've added it. Now I've added this high. When I've changed the FRVP zone, what I'm going to do is, first I see this swing level here, blue one. I'm marking the FRVP POC zone, POC only. I'm not marked anything else. Now I'm changing from this swing high. I'm moving to the next swing high. Okay, let's do that. You see there's a shift in your POC. Just type it here, it'll be easy. Let's put it as POC 1. There's a shift in POC. How many candles did I change? I just changed 1 or 2 candles. The entire POC, point of control, where major activity has happened, that has shifted to this point now, right? And you see that I have marked green color candles. Green color candles. I have not yet moved on to the red ones. I'll mark, let me mark all the green color candles here. Right. Now, when I've marked these 3 green color candles, who has sold it here? Now you see there's a shift again in FRVP, POC level. I'll just go back here. Let me show it to you clearly. Green color candle, green buying, super. Red color candle, there's some mixture of price here. You can see green and red both. All right. Now let me move to the next green color candle. POC has shifted. And is there a candlestick here? Is there any candlestick here? No. But you can see that there's a red color POC from this candle. So somebody has started placing shorts here. Understood? Done. What I'm going to do right now is I'm going to shift another candle higher. Okay. POC has shifted here. So let me just mark the new POC. Done. So this is my POC 2. Brilliant. Why did there's a green color candle here and somebody's telling me that who's been shorting the market here? In the live market, all this knowledge, if you want to build, you have to shift using your FRVP zones. And there's no other way to find trap. This is a trap signal. This is a trap signal. Why is it a trap? Because price is moving in one direction. And here, the net activity is selling. Somebody's selling when the price is moving higher. Here, if I move it to another, the next candle, what happens? I'm still marking all green color candles. If you see, I'm still marking all green color candles. POC has shifted now. POC has shifted and all these 3 color green color candles are imbalance candles. Somebody has been shorting in these 3 candles, right? So let's just do this. A shift in POC. This is my POC 3. 3 POCs have shifted in just this much of price range. 3 POCs. Now we know the imbalance. Okay. POCs are levels for us to use in the future, but it's not, let's say, a very, very important thriving concept right now. POC, FRVP is very important. The idea or the concept of FRVP, that's more important. So what has happened here? You see that price was going higher. Shorts were being placed, right? Shorts were being placed in this. Simple. This is one zone of operator activity. Let me just see what the volume chart is telling me. Let me go to a 15-minute chart. It'll be more clear. Right. This is the same price action, right? This area of price. I'll sync this. Right. Right. So this is the area of price here on the right hand side. I've gone to a smaller time frame. Can I see imbalance structures? Because FRVP first told me somebody has been shorting the market. You can see this large spikes of higher time frame movement, and there is an imbalance candles which are being forming in series here. They have been forming in series. So these 3 candles are imbalance candles. So what did I tell you? What did I tell you when this thing happens, when there's some sort of an operator activity, that price will always come back and retests this entire zone. So it starts from here. Let's say this is this part here. I can mark it second. right? This is the area of where the price activity has started, right? These are the two candles, the low of this candle and the low of this candle. They are two different candles. So I'm just marking both the lows. From here is where the price activity has started. Done. What I'm going to do right now is, since I know price is going to fall, let me just show you that price comes exactly falls here. You can see this. It comes exactly, let me zoom out, it'll be better. Right? Price exactly comes here and falls. This is where it turns from. Price exactly turns from here. This was the bottom of a very good swing move here, definitely. And what else has happened here? This is the first operator activity zone. This entire thing, you can see there's one imbalance, two imbalance, this entire move, and there's a major imbalance here. There's another imbalance here. Price has risen fast twice, right? But the maximum real activity in that price is selling. What is it doing first? What is happening here? It is overlapping with this zone, right? These two are overlapping, correct? So there is one zone of operator activity. There's another zone of operator activity. These two are merging. They're combining or they're overlapping against each other in price. So this is an anchor point. Understood? This is an anchor point. So when an anchor point forms, when does it form? Before the final leg, final move. So if you see here, if I just zoom out a little bit, what has happened here? Before the final leg. So there was a final leg, blast off. There was an anchor point before that. Now this anchor point, if I go further, it will come and break this point. So, right? This thing was a final leg and now this has broken. Okay. So before a final move in the market or any wave, a small, it can be a simple small move or a big one. So all I'm talking about this entire range of price is here, this tiny bit of price. This tiny bit of price where price has gone here, we have formed an anchor point, a new high in the market, and then fall down. So this terminal leg, the final move which has come, it has come before an anchor point. Let me just go down to a smaller time frame. It'll be more clear, right? Right. So we are talking about this part and then a new high, right? So this is part of my research, guys. This is what I've been working on for so much time. It's very difficult, when there's nobody to tell you all this. Uh, to research this, spend hours and hours together. I'm sharing it this for free, that so that you can open your mind towards how market actually operates, the myth behind what has been taught to the retailers. Every single Tom, Dick, and Harry out there have been reading textbooks and puking out knowledge, thinking that and gaining a lot of fame and subscribers. I'm not against that. Share your knowledge, no problem. But this is the reality of what is happening in the markets. If everyone studied textbooks and thinking that they become rich, I've told this quote a lot of times that you cannot read a textbook and learn how to drive. Right? You have to do that on the road driving to gain road experience. So in my road experience, I have seen all these twists and turns. I have spent countless number of days, months, years learning, researching, and this is one of the concepts which I'm presenting to you, anchor point theory. Anchor point is very useful when you want to determine a reversal or when you want to book a profit beforehand, or if you want to determine a structure of price before it moves. Now, no matter what happens, I know that market is going to go higher once again, and then even if it comes back down here, and then if you get a new high, I know this entire zone is going to act as an anchor point. So let me just wait till whichever side this price breaks, and then price is definitely going to come back and retrace here. If I add time cycles into this mix, right, if I add time cycles into this mix, like I said, time will tell you a trap. This candle was a trap candle. This candle was a trap candle, and based on that, that itself acts as a small anchor. There are two kinds of anchors, like I told you, overlapping of price and trap candles. They themselves are anchors. This I'll talk about it when I release the video on sorry, the video course on volume. Okay, now let's get into the juicy part. Juicy part of this video is, now I'll just take an example of this stock. So this is the stock of Bajaj Finance, and what I'm going to do here is I'm going to show you something different and something fun, which helps me most of the time. And this is one of the spines of your breakfast indicator. Here you see that this is the stock of Bajaj Finserv, and there's an earnings report which is coming out in, let's say, a couple of days. So if today, this is a replay I'm showing, if today is Monday, the 28th of April, and the first 1 hour candle has formed, and tomorrow evening, let's say 29th of April evening, there's the earnings report coming out for this stock, for this company. Sorry, here you see there's a candle which formed here in the morning, for Monday morning, and there's a huge volume spike. Huge volume spike. Let me tell you that all your fancy gurus who posts volume spike charts in your Twitter or YouTube and tell everyone that this is the time to buy or sell. Let me show you something totally different here. There's been a volume spike here, and let's say the color of the candle is green of the volume. 99% people assume that this is buying pressure. You get it? There's been a green volume and there's a green candle here. Hence, somebody has bought. This is what is the retail logic. I'm not saying you're wrong. I'm saying that the education which is available right now for the retailers, this is what it tells you, right? That green color means it is buying pressure. This red color means selling pressure, right? Wrong. I'll show you what happens here. If that is the case, if you have thought, okay, let me buy here, market is going to go higher. Okay, there's been a pole and flag type pattern here. And sorry, a pole and flag does not look like that. It looks something like this. A pole and flag type pattern here. Market has dipped here. Market is going to go higher. This is what you thought. And you see a good spike in volume. Okay, this is my buying opportunity. And you take entry here. I'll show you what happens. Let me go forward here. And you see for yourself what actually happens in the market after that. There was a 6 to 7% fall from that point. When this candle closed, it's actually 7% fall from that candle closed like a doji, right? From there, it has been a 7% fall in the market. But there's supposed to be a buying pressure which happened here, right? There's a green volume spike, green color candle, gap up, should be buying pressure. Now, let me tell you something very important. There is another candlestick chart. Again, I told you this is the juicy part, and I know the questions which are going to come. And that's why in the beginning of this video, I was smiling and understanding, because imagining all the questions, all the comments which are going to come. But again, keep an open mind. This is something different. I'm going to show you another candlestick chart. Now, what is this candlestick chart? What it is, I'm not going to reveal right now, but I'm going to show you something important. On the right side of this candlestick chart, it tells me the actual buying and selling activity that has happened. Okay. What I'm going to do right now is, on your left hand side is your normal stock chart, which everyone sees. I am marked this high. Same thing I'm going to do is I'm going to mark this candle's high over here. What has happened? What has happened here? Like I told you, on the right hand side, this tells me buying and selling activity. This tells me that when there was a volume spike here, when everyone's thinking this is a bullish volume, there was some major player in the market who shorted it so bad that it almost crashed. All right. This chart crashed on the right hand side. Someone shorted the market so bad that the chart crashed. This price crashed. But the price chart, it hasn't moved. It's a doji, right? So what does this mean? If I take this understanding that if this is telling me buying and selling operations, what is happening? This is telling me that in this candlestick, there was abnormal, suspicious, or unusual activity that has happened, and that is selling. somebody has done unusual selling in this candle. Unusual. And to your further curiosity, when did the major fall come? It came the next day, the huge gap up, the day of the earnings report. Now, you tell me, one day before the earnings report, there was 7% fall in the stock. Somebody shorted the market beforehand, right? Somebody shorted the market beforehand and they are sitting on shorts. What does the retailer do? The normal retailer does not know about it. He looks at this big candle, he starts to liquidate the position. Okay, let me add more shorts. Market has fallen 6%, is definitely going to break down. The news is going to be negative because there's an earnings report the same day of this gap down of 7% fall. There's going to be a news activity or the earnings report is going to be bad. That's why the stock has fallen. Where has this individual, the individual or the operator or the secret guy, where has he shorted? He has shorted previous day before the fall comes, right? Before the fall comes. So what I want you to do is whenever you think going forward that there's a big gap up or a gap up and gap downs are done by, let's say they're done by some news event or whatever by operators, but their position in the market is placed much before the market moves. You understood? Now, this is a green color candle. There's a green color volume spike. 90% think this is a bullish signal, right? All those who study volume, all those who study volume is rising, volume patterns here. What do they tell you? That, okay, this is definitely a big spike. Dead volume, volume breakout candle, superb, all that. What has happened here actually? Market has dropped from here. There's a real seller in the market. So this is the chart I use for identifying some, let's say, unusual activities. This is the chart I use when on 20, I don't remember when exactly which date, but I shared it in public that NIFTY, right? The fall in NIFTY. When we were in Jan, the month of Jan, the entire fall of January month is a fake fall. I have multiple confirmations, something of that nature I told you, and it will be completely retested. This is what I told you. When we were down here in March 1st, simple message, 24,000 will be retested this year itself. Where are we? We have touched this high again, right? We have come back to this high. 24,000 also in Nifty has been tested. This is what I have used to understand traps, unusual activities. And this is the basic idea behind your price time volume relationship in your breakfast indicator, right? This is a critical component. Obviously, I cannot reveal it now. I will definitely try and reveal it in the volume analysis course. I hope this is an eye opener for some of you and how the market operates and what has been taught to the retail people. I have tried to show via some indicator because it's very hard to teach someone without showing them. Let's say seeing is believing type, right? It's very hard for someone to learn it. If I just tell it out in audio form, this is something which you must keep an eye on. This is a higher level, advanced level of analysis, which 90% retailers will never ever see in their life. Looking at Nifty, let's look at Nifty. Same thing, same chart. Price action, we found overlapping zones, we found anchor points, right? We know this entire area has been an anchor point. So what I'm going to do right now is the recent swing low from 23,800. What is this on the right hand side? What is this chart telling me? Let's see this entire move here. This move was on let's April 17th, right? April 17th onwards, this move came. And when I mark this on this chart, on this candlestick chart, it's over here. There are two major different stories which has been played out here. If you see this, a good rally, buying activity. What is this part then? And you see this. What the hell is happening here? What is the actual story between buyers and sellers at this point? What is the story here? If I tell you in detail, it will take a lot of time, but just to summarize it, that there has been distribution happening. There's someone who's been selling all this while. Somebody who's selling a lot of stock or whatever they're doing, they're selling. There's a lot of selling activity. Or in other terms, distribution activity, which is happening in the anchor's point. All these are just confirmation of the same theory that this is an anchor zone, anchor point or an anchor zone, right? This entire rally from here, let me just check from where it started. Okay, it started from here at this point. This is the same point as this, but in price, it has moved further. In this chart, it has been sell off. There has been a continuous sell off. So this is a fake move in price. This is a fake move. The buyer or seller activity is telling me something else. That this entire move is a fake move in price. Somebody has been selling or shorting the market here. So no matter what happens here, no matter how high it goes, our anchor point will pull the market back down. Your seller's activity also confirms that this is not a real up move in the market. It is going to fall down also. No matter how high it goes, it has to fall down. So what do we need to wait for? We need to wait for this anchor point side to break first. We need to break, and then we'll know. If you're telling me, sir, the anchor point was over here, fine, that's no issues with that. I don't mind it. You can tell me that price will break this down. Okay, that's good enough for me, because already somebody has been placing shorts when the market has been rising. Understood? Anyway, this is what I wanted to teach you in this video. There is something beyond my scope to teach right now. We will get there. When we get there, you must have a mechanical system of trading already, because and also you need a system to understand price. Without price knowledge, all this is no use. So remember, before we get to volume, we're going to go through time, and then we're going to volume. Once we get here or here, if you don't know price, if you're not studied the advanced concepts, it's pointless for you to move forward. It's pointless for you to move forward. From here, if you want to start again, this will take years of your time, frustration, years, and annoyance. So I'm going to tell you right now, this is your starting point to start from price. Finish the Elliott Wave Master course. Comfortable, if you feel comfortable, move on to the advanced concepts. This will be a smooth journey. Then time and volume will be a smooth journey. There's something beyond this also. We'll cover that. I'm going to give it everything for free, all my research, but keep in mind, it'll be no use to you if you have not studied the price. All right, thank you guys. I'll see you in the next video. I hope you found something useful in this video. If you have, then definitely leave a comment and I will definitely reply to it. Thank you and be safe.